All right. As Sue mentioned, now we have breaking news. There is plans to launch True Stage stablecoin, designed for credit unions to move money instantly, 24/7, backed $1 held in reserve. Now I'd like to invite Tammy Schultz, EVP of Sales and Marketing for True Stage, to tell us a little more. Tammy.
Thanks, Brandy. So at True Stage, we are super excited to announce the launch of our True Stage stablecoin, one of the first in the industry to support the credit union industry with this stablecoin offering. So we're also partnering with, we're partnering with an organization that will help us make sure that we get all the compliance and the regulatory. It's Block Time Financial, thank you. It's a little slow this morning. Block Time Financial, they'll take care of all of the financial and regulatory pieces of this, as well as the background and the operational parts of it, because as you can imagine, it's pretty technical on how you make this come to life. And so as I think about the last couple years at True Stage, we've really wanted to get back to our roots. We are an insurance and financial services organization. So what you've seen over the last couple of years is us exiting or divesting of products and solutions that just don't fit who we are. And we want to be better partners with organizations that can help us get there. And so when I think about stablecoin, for those of you that aren't familiar with it, it is not a crypto, it's not Bitcoin, it is backed, like Brandy said, by the US dollar. And so it's something that's a little bit more stable, less volatile, less risky. And so when the Genius Act came out in July of 2025, what we started to do is talk to the credit unions, and we heard a lot from our partners saying, hey, what are we gonna do about this? Because you could, if you imagine every credit union going out and figuring out their own solution, thousands of different ways of doing this would be very complex. And so we feel like at True Stage that we can be one of the best partners in this because it is part of what we do every day. So when you think about where we're headed here, we are starting with phase one. Phase one is a hosted wallet where we're going to focus on B2B transactions. So when you think about it, it's True Stage can pay non-interest income, reimbursements right to the credit union faster, simpler, less fees, those sorts of things. It's going to be credit union to credit union, as well as loan settlements. So we're going to focus mostly on the B2B, so think of it that way. We're going to focus on 15 credit unions in a pilot. So if you're in the state of Wisconsin, Iowa, Illinois, Utah, Florida, Virginia, and Washington, those are the places we're going to start first, because as you can guess, there's a lot of regulatory approval that you have to get through. And what we're going to do is just, there's no fees, no integration at this level. The next phase will be taking 15 credit unions to hopefully thousands of credit unions. And then the third phase will be around how do we get that to member, member to consumer, or to merchants and that sort of thing. That will probably take a little bit more integration than the first phase. So we are super excited about this opportunity, and I want to thank Zach, Brandy, Sue for giving us this time to share how excited we are about it.
And thank you for helping us take credit unions to the next level. So I'd like to introduce some additional people that will join Tammy here up on stage, because we're going to talk about moving from physical cash to digital assets to blockchain. What does that mean in these new ecosystems? So please help me welcome Kevin Brower, CEO of Affinity Federal Credit Union. Amber Harson, VP of Credit Unions from Mambu, and Stephen Bohannon, Founder and Chief Strategy Officer for Alchemy. Sure. Anywhere you like. And you know, Stephen's really good at this, so
I am.
Take it away, poke and prod, my friend.
Set me up. Well, I have a tendency to, if I feel like the whole crowd, if all the lemmings are going a particular way, I tend to try to go the other way because there's a cliff coming. So let's break into this whole Genius Act and stablecoin. And now I will just say to start with, I am a technology geek by heart. I love new things. I like bright shiny objects. I like to check them out, but I also like to maybe take the other side every now and then. And I have to admit I'm struggling a little bit on the stablecoin thing, really understanding kind of you may not know this, but I grew up in a preacher's home. And so I remember in Sunday school, one of the Bible verses, it was Paul's letter to the Corinthians. He has a statement, everything is permissible, but not everything is beneficial. And so I kind of went, the Genius Act, we have permission, but is there a big benefit? And so I guess the question I'm going to ask this panel is, would you be a genius to act or not to act on the Genius Act? So it's kind of a woodchuck chuck kind of moment here, kind of question. And so I guess, well, we know where you stand. You just announced it. Well, you're obviously biased. We can't start with you. But Amber, I'd love to hear your thoughts on this. I mean, you know, is the juice worth the squeeze on this? Like, what's the big hoopla? Like, what I mean, what is this?
I come from Utah, first of all, so we're very stablecoin crypto friendly in my land as well. I think the data shows us that it's moved beyond fad or trend, right? There's billions of dollars that consumers are putting into cryptos and blockchain assets, right? Like they're kind of telling us. So I think I personally think we've moved past the state of trend into the next structural shift of money, which we've had before. Credit unions have been around for this. We went from cash to cards. We went from cards to digital channels and digital banking and being able to move money a little bit faster online. I think we're just in the next round of that structural shift, and the question is becoming less and less about the ideology and the should we into the can we. Architecturally, structurally, are we able to actually adjust to this structural shift, this next structural shift? So I'm also a little bit biased in this regards. In that I think that stablecoins provides a safer alternative, and I think it certainly gives an opportunity for credit unions to participate in more of this blockchain world / cult that it has been for a very long time, in a way that's a little bit safer and more trusted by communities.
But if all you can offer me is stablecoin, for instance, and I'm into crypto, like if I want Bitcoin or Ethereum or something else, why would I kind of like have everything at Coinbase, but then I would just have my stablecoin with you? Like, why would I kind of, I mean, if you can't offer me all kinds of crypto, like why would I want to split that up?
I don't know that I'm smart enough to answer
Okay,
that particular question.
I'm just playing devil's advocate here a little bit. All right, Kevin, you have a thought on this?
Yeah, I do. I have quite a few thoughts. I think it's very exciting that we have a new channel in which we can move money for our members. Add that to the 12-plus channels we already have of money movement in and out of the organization. I think that's the ultimate opportunity that as change occurs, we've got to be there for our members. The problem I'm having is our members aren't asking for stablecoin. Not a person that I've talked to from a member standpoint has asked for this. What's going to drive this is the merchant change. Merchants are going to force the change on consumers. So if you take Walmart or Amazon and they start offering you incentives to pay by stablecoin, we as an industry have to be prepared to answer that bell. Now remember, there's a lot of things that go behind this. The stablecoin isn't insured. It's going to move. We've got to help them convert from a digital currency to a hard currency. That's where the credit unions can come into this. We need industry solutions to help us do this because most credit unions, including Affinity, are not prepared to offer our own stablecoin. Our benefit is if we coalesce as a credit union movement around this, we can benefit. We can be different and we can answer the bell. But each of us individually are not going to be able to do that on a regular basis.
Yeah, you can't issue. I mean, I guess everyone could issue their own stable coins, but then that would be kind of an issue, right?
Exactly.
There's big players that obviously like a Walmart and Amazon, like you mentioned, which has enough scale to where they could issue their own, and then that could be kind of an accepted form of currency that could be used. But really, when you get into the individual institutions, I mean, where we're going to have 5,000 different stable coins that we all issue. I mean, it's kind of a. And again, I'm going back to. By the way, whenever I say all these opinions, these are not necessarily my own. Sometimes it's just representing another side of the coin, because I do think there is an excitement around this because it has the tag crypto on it. It's, oh, we got to be into crypto. Well, what crypto? Well, we have stablecoin. Okay, fine, that'll do. But when you think about like where a lot of the excitement is around crypto, it's, it's funny how it's always at a fever pitch when Bitcoin's at around 110, 120, and then all of a sudden when it's down in the 60s, it kind of dies down and you don't hear a lot about crypto. And then once it gets above 100, oh yeah, we got to do crypto again. So there, and really what it is I think that what I'm seeing, because we have customers that tell us this and we have analytics that they see this, it's when they see these outflows going to exchanges and they're just seeing kind of the deposit intermediation that's kind of happening. That's whenever there's this kind of reaction of we've got to get into crypto because I've got tens of millions of dollars flowing out of my institution every month going to Coinbase or some other crypto exchange. And then there's this kind of like, what's our answer? I guess my question is it stablecoin? Is that really the answer? Because to your point, no one's asking for this.
They are, however, asking for money movement to be faster. And that's certainly what gets enabled in this type of environment, whether it's a cryptocurrency or a stable coin. Consumers are expecting a 24/7 real-time instant settlement world, and that does not exist in the world of ACH.
So
That
then why
does
not just
open-
invest in FedNow and RTP and bring that to life and start sending instead of just receiving? I'm just saying there are options for some of the things you're referring to
Sure.
that have been out there and around for a long time that already have scale. Do we really want to go spend this time investing in yet another thing that incrementally isn't that much better than what we already have?
I think we have to a certain extent, because what's going to be impacted is interchange. Interchange is going to go away. So as we take a look at this, we have no choice but to try to figure out how our play in stablecoin can lead to, you'll never make up the interchange, but at least a fee income source longer term. So these are big decisions to make that have long-term strategic implications for most credit unions.
Tammy, we're going to get to you now.
Yeah, well, I just read an article in the CU Times, and I think it said that the credit union industry isn't going to be impacted by a big disruption. It's going to slowly slip into irrelevance. And so I think it goes to what Amber was saying, too, is there probably will be multiple solutions out there, but I think on the stable coin, I know as a credit union, I member three credit unions, so I'm one of those awful people, like how many times do you count me? But I transferred money from one to the other. It took 5 days. Right? I mean, that's not going to be our future. And I think our average age is 50 years old. The younger generation wants things faster. They don't want the fees associated with it. So to be relevant, we're going to have to do something. And we believe stablecoin is one of the solutions.
Do you think do you think it right now, like there are certain things that we do as an industry that we would put under the category of this really moves the needle, I can quantify it, I've got the ROI, I've got the business case down for it, and there's other things we do just so that we can check the box to say we're not behind. We're not irrelevant, we have that too, even though maybe it's a loss leader or it's used by less than 1%, right? Where do you think this falls right now? Do you think this is just check the box to be able to say we've got it so people don't think we're stodgy and old and not with the times?
Well, I think right now, based on the fact that we're still waiting for regulation to be issued, I think most institutions that I'm aware of are still in the planning process. What's the next step? What are the things we need to do to prepare ourselves to get ready for stablecoin? And that is going to be the next big question that the board of directors of credit unions are going to have to address. Are we in this? Do we have a place in this? Will we be irrelevant if we don't have it? But we also have to be realistic that there's going to be a significant amount of fraud in this opportunity as well. We still have credit union members that give away their credentials on a regular basis. I mean, can you imagine having them open this up in a wallet? These are real.
Yeah,
Tammy,
and
you were
I'm going to go back to what Brandy said. She talked about out-collaborate. I think this is the time for us to do that, and I think that's why we're starting with that small pilot, because even up to announcing our press release or releasing it last week, we were getting new regulations about how we can call it, how do we need to talk about it. So I don't think it's just a check the box. I think it's setting us up for the future.
I also think it's a bit of an inflection. So I'll jump on your playing devil's advocate train here a little bit in saying that maybe stablecoin is still more of a fad or a trend, and the do we need it or is it just a box check. I do think it's an additional inflection point to also talk about, are we actually structurally ready to be able to take advantage of emerging technologies that are going to actually grab their foothold and become those structural change. And we aren't dealing with that yet. We're kind of trying to do that around the fringes. We're trying to modernize around the fringes. But I think it is a time for us to also now consider whether all of the tech we're buying are products. Is it strategic? Is it infrastructure? Is it architecture? What is it that's going to actually make us future ready to be able to respond quickly? So if we get nothing else out of the stablecoin conversation, I think it opens the door to, is our credit union movement capable of taking advantage of the technologies that are available in a way that make us usable and relevant, so that instead of just being a trusted but nostalgic piece of the past, we're actually part of the future of money and serving those underserved communities. So I think there's even a broader conversation. We can say, does this get us ready for it?
Yeah, and this is where the juice being worth the squeeze. It's not like, oh, I signed, now we offer stablecoin. Are you training your MSRs, your branch personnel on how to explain this, how to talk about it, if there is fraud? I mean, part of the things is it's 24/7 by 365. It's cross-border payments. So now I've got a whole nother money movement or another exfiltration channel out of my institution. Like the cost to roll this out, even within your own institution, so that everyone understands what it is and how it works and how do you support it and everything else, there's a cost just for that. And so, again, you come back to some of these questions. I mean, some of the downsides I'd kind of read about was you could be in a spot to where if you're encouraging people, because this has to be dollar for dollar backed in reserve, it can actually affect how much you can loan out, because now that money held over in stablecoin is no longer part of your balance sheet that you can actually go and loan on. And so then you kind of like, are you like the dog that caught the car here? I want to offer it. I really didn't understand all the ramifications by it actually being successful in my institution. So it's almost like something you want to have to say it checks the box, but you actually kind of secretly hope no one uses it. So, it's serious. You have to really think about, we have products like this already. So anyway, thank you all so much. I got the hook up there. There's been a fantastic panel. Thank you. If I do say so myself, thank you all for participating and for arguing with us. All right. Bye.